Hey people, welcome back to Caroline's Online Academy. We are in the process of solving previous year questions and sample paper questions from the chapter Dissolution of Partnership Firms. And currently we are solving all the journal entry based problems where they require you to prepare the journal entries. So far we have solved around 5 problems. Let's continue with that. Today I have a question from uh, compartment 2019 question paper, Ravi and Mukesh. This is a very interesting question. It actually deals in detail about the about liabilities taking over assets, because we are only going to be working with two items in the entire question. One is one is creditors and the other is stock. Let's see how this question was framed. Ravi and Mukesh were partners in a firm sharing profits and losses equally. On 31st March 2019, their firm was dissolved. On the date of dissolution, their balance sheet showed stock of 60,000 and creditors of 70,000. After transferring stock and creditors to realization account, the following transactions took place. Ravi took 40% of total stock at 20% discount. 30% of the stock was taken over by creditors of 20,000 in full settlement. Remaining stock was sold for cash at a profit of 25%. Remaining creditors were paid in cash at a discount of 10%. So the first transaction is Ravi took 40% of the stock at 20% discount. So what is 40% of the stock, my dear children? The total stock is 60,000 multiplied by 40% will give you 24,000. But he took it at 20% discount. So 24,000 into 20%. So the discount amount is 4,800. So for how much would have Ravi taken stock? 24,000 minus 4,800, which is 19,200. Now, when you sell the stock, the journal entry, sell any asset, the journal entry is bank account debit to realization account. But if the asset is taken over by the partner, you don't get money in the bank, but it is set off against the partner's capital account. So here, partner is taking the capital account, and therefore Ravi's capital account will be debited to realization account. And that will be how much, my dear children? 19,200, just like how we calculated. Now, stock taken over by Ravi. All right. The next question is 30% of this total stock was taken over by creditors of 20,000 in full settlement. When a liability takes over an asset in full settlement without paying any cash or any other thing, then it is considered to be what, my dear children? The journal entry would be realization account to realization account, and therefore no entry has to be passed. Remaining stock was sold for cash at a profit of 25%. So what are the remaining stock? How much remaining stock do we have? You see, out of the 100% of stock, Ravi took 40%. He had 100% stock. Out of that, Ravi took 40%. And just give me a second. Yeah. Ravi took 40%, and 30% of stock was taken over by creditors. So what are you left with, my dear children? You are left with another 30%. You're left with another 30% stock. That is 100 minus 70 is 30%. 30% of stock is how much, my dear children? 60,000 into 30% is 18,000. And this 18,000 stock was sold at a profit of 25%. So 18,000 into 25% will give you 4,500. It's a profit, so I'm adding. The amount realized from the sale of stock is 22,500. The journal entry for sale of stock is bank account debit to realization account. Stock taken over by stock realized, actually. Realized. And that will be 22,500. And the fourth transaction here in this question is remaining creditors were paid in cash at a discount of 10%. Now, who are the remaining creditors? Of the total creditors, in the second point, you see that creditors of 20,000 have taken over stock. So the remaining other remaining creditors, like total creditors was 70,000. Out of that, 20,000 rupees creditors have taken over stock. Am I right or not, my dear children? How much are the remaining creditors? The remaining creditors are 50,000. Am I right? These 50,000 creditors were paid in cash at a discount of 10%. So they have agreed to give a discount of 10%. 10% of 50,000 is 5,000. So they would have been paid how much, my dear children? They would have been paid 45,000. When you pay creditors, what is the journal entry, my dear children? It is realization account debit to bank account because money is going out of the bank and paying creditors is a loss for us, expense for us, loss for us. So realization account debit to bank account. And that will be how much, my dear children? 45,000. With that, we have come to the end of this question, my dear children. I'll meet you again with another question. Please do like, share, subscribe. A lot of people are watching these videos, but none of you actually like the video. I mean, you don't press the like button. Just kindly do like press the like button. Will help me with the algorithm and push my videos so more and more people can see it. Share it with friends who are preparing for board exams. Until then, you people take care, have fun, and bye bye.